IT comes to the fore, Ajay. Would love to understand your thoughts. I was reading a Morgan Stanley note on HCL Tech today. They took the company to a US investor day, and the company said that they 99%, 9 plus exposure is to large banks and insurance and BFSI and not to regional banks. And therefore, they sounded confident that they won't get impacted. The flip side is that people argue that it may not just emanate from banks itself, but from a bunch of other sectors which might get impacted because of liquidity as well. So my question to you is, are you sanguine on IT? Have you used this correction as an opportunity, or are you not so constructive because the clouds are too many to judge what could happen?
I think, Neeraj, that's a very important question that you've asked. And I think IT is front and center for most investors today, because that's one sector which has a very strong correlation with the US economic outlook and what's happening there. Now, our views on this. See, before I discuss points specific to the sector in general, let me start by saying markets are extremely forward-looking. This is one asset class which looks out 4 quarters, 6 quarters, sometimes even beyond that. So therefore, please do accept the fact that sometime in December of 2021 and January of 2022, there was this lurking feeling that interest rates are going to increase, and whenever interest rates increase in the US, they do impact the growth. When growth decelerates, the focus of organizations around the world and in US as well is more on margin protection. When you start to protect margin, you lay off people, and you also reduce discretionary things like IT budget. So I think that was the context in which we have seen a 30 to 40% decline in IT stocks over the last, I would say, 12 to 18 months. Now, to repeat the same logic today, that look, US is headed into a recession, is in a way double counting, because then you have to explain that why did stock prices come down by 30-40% in the last 12 months, because their profit growth has been very, very strong in FY23. So these stock prices were basically discounting the softness that one is to see in FY24, possibly some part of FY25, and then business as usual. So I think that's point number one, which all of us have to acknowledge. Now, point number two, how resilient is the IT industry? I would say, if you go back and observe these recessions in the US, whether it's the dot-com bust-led recession between 2000 to 2002, or it's basically the financial crisis-led recession between 2008 and 2010, in all of these events, around the event, a few quarters before and a few quarters after, there certainly was uncertainty. But the one thing that we have learned fundamentally from these episodes is that Indian IT actually gains more and more strength. Remember, I just said that during uncertain times, the one thing which all organizations wish to do is get back to their core, leave out the attempts to diversify, and concentrate on margin improvement. IT as an enabler of improving productivity and raising margins is a sector which has made itself relevant through many of these recessionary cycles. The script will be repeated, because whether it's Facebook or Amazon, all of these guys have realized that they're not going to throw money away by getting into newer businesses. They need to conserve cash. They need to have a solid balance sheet, and they need to improve productivity. The importance of IT outsourcing players as their partners is something which gains even more traction. Yes, there could be some bit of budget stalemate for a couple of quarters, but if you and I are investors not looking only at the couple of quarters, but the scenario 2 or 3 years down the line, I would say, like in the past, people would be pleasantly surprised to see that these companies come front and center, during recessionary times. Yeah.
So the only question is that, to your answer, I would have accepted it wholeheartedly, but for the fact that the last 15 days there is an SVB issue that has happened. You don't think that will have any collateral damage first?
So I would just in a way reiterate, which is that it may have a damage for a couple of quarters, because for a couple of quarters people just want to wait and see. So for a couple of quarters, instead of increasing their IT budgets, they will say that, look, let's just go ahead with whatever we have planned, and let's just see how the dust settles down. But that's a situation which doesn't have a shelf life of more than a couple of quarters. After that, as the dust inevitably settles down, corporates and the really resilient, forward-looking corporates come out and say that, look, again, go back and improve productivity. This is one very important source of productivity improvement. So therefore, let's concentrate on this. So I think that is something where, as a team, we are extremely confident, and therefore, while I may not able to tell you whether the stock prices could see another set of correction in the coming months or quarters, but I think we are very, very confident about their business outcome over the next 3 years. In fact, like I mentioned, their relevance would actually only improve because of this recessionary trend.